Interesting. Well, that's not working, but you know what? We are just going to go ahead and go along with it. We will make this work as we go. So, hello and welcome, folks. I'm going to go ahead and share my screen with you. And let's make sure that everybody can see. All right, you should be able to see the PowerPoint. Okay, excellent. All right, well, hello and welcome, folks. My name is Ray Fleming, and welcome to another Lunch and Learn Business Credit Time. Pictured there on the screen is myself and my partner, Joseph Smith. We are the Wise Guys in Ties. Feel free to reach out to us at any time, 888-524-9273, or you can go over to wiseguysinties.com, where you're able to find out all you need to know about how to get funding and build a business. So today is pretty exciting. We're going to talk about a couple different new things. For example, what are the 5 qualifications of really finding some lending? A lot of times that we are looking for lending out there, we don't know necessarily what we actually need to present to the lenders in order to get those fundings. So today, in the 5 C's of funding presentation that we're doing, I'm actually going to be talking about 3 of them, because all 5 of them would take about 2.5 hours to cover. So today we're going to be covering 3 of them, and next week we'll touch base on another one, and so on from there. And we will make sure that we get all of these covered for you. The first thing that we want to talk about in the 5 C's of funding is character. Now, character is crucial to what we want to do. Now, as we talked about the other 5, there's capacity, there's cash flow and credit, and collateral. These are all factors into what a bank thinks of your business. And so you may be asking yourself, what is character? How do I actually affect the character of my business? Well, this really pertains to, is your business being treated like a hobby, or is it being treated like a business? And you may be asking yourself, well, what is the primary difference? How could a business possibly be thought of as a hobby? Well, in the beginning stages of starting a business, many times it's something that we like to do. So many times, hey, we started this business because we really enjoyed this product or this service. And many times we use this business that we quote unquote started to really fuel our hobby, and it doesn't become profitable. And in the eyes of the IRS, if you do not become, if you don't start making money in the first 3 years, they're just going to continue to classify you as a hobby and not necessarily a business. Now, a business, that's kind of taking your hobby to the next level. This is really jumping in. This is focusing on, getting something up and running so you can start to make sales. The next aspect of your character is, are you a scam or are you legitimate? Unfortunately, in the world of financing, a majority of people, or companies, I should say, that are seeking financing are actually fraudulent in one way or another. It's very easy to start up a business, and it's very easy to go and apply for business funding. So the funders on the business side, the underwriters and the banks and the institutions, they spend a significant amount of their resources preventing fraud. So what we need to do as business owners is present lenders with a credible business. And that comes down to the character. They want to make sure that this business is serious about what they're doing. Now, when you're thinking about getting loans or lines of credit or funding in one way, shape, or another, we tend to go and focus at the bank. That's primarily the #1 place that people start to look for the funds. Now, the only downside to this is, if you do not have a track record and you have not established your credibility, you're not going to be able to get the money you're looking for. So as you're looking for these funds, you're going to fill out a loan application. And the bank, they know that the The money your business needs is with the bank. And so on the loan application, what you're going to do is you're going to be filling out your business name. You're going to be filling out your business address, phone number, email, website, bank account, and you're going to submit that application. But the thing is, whether you're doing this online or with a banker, they're not the ones that are making that decision. They're going to say, quote unquote, the underwriter. And now, who's the underwriter? What that actually is it's a computer gatekeeper who runs a risk algorithm. It will analyze public data sources. It will look at your credit if you're utilizing your personal credit, or if they're looking at just the strength of your business, they're going to look at that. They're going to evaluate any type of public records through LexisNexis or the check system to see if there's anything that trips up their system. Like we said, number one reason for this is the level of fraud, and they're trying to prevent that. So if anything is out of line in this foundational setup process of your business, it will instantly kick back a denial. Now, we don't want that to happen. What we want is for you to have the right character, and that comes into the foundational setup of your business. Now, the next C that we're going to talk about today is capacity. Does your business have the capacity to basically pay its bills? So when a bank or a lender is looking at capacity, what really is important is your track record of paying lenders back. So imagine that this is a baseball game. Your business pays its bills. And that could be, in a baseball game, that's the baseball. Now, what happens once you pay that bill? Well, it goes to the pitcher, and you made that payment, and your creditors now receive that payment. So as you have that payment, you're going to launch that. You're going to pitch that ball at that batter. And is it going to hit? Is that payment that you made going to hit your record? And of course, at the end of there, the umpire, that's the one that's going to be calling whether it was a good payment, was it a bad payment, or was there no payment at all even seen? So the business credit bureaus record the on-time payment. Now, this whole process with the pitcher, with the batter, with the catcher, with the umpire, this all needs to be in place. If you're missing one of these components, and let's say that there's no batter there, well, then nothing is ever going to hit. Nothing is ever going to land onto your record. Or if the umpire's not there, there's nobody to actually record that happened. So one primary difference between business credit and personal credit is setting up those business credit reporting bureaus and making sure that the business or the lender that you're working with actually reports. This is something that we are not used to, because on our personal side, if you have a credit card, it's just assume that it's going to report onto your credit reporting bureau, and you didn't have to worry about setting that up. Not the same on the business side. So we need to set those aspects up. And then once that track record starts to be recorded, that really develops your capacity and your track record of paying back lenders. Now, the more bills that you pay on time, as you receive your invoices and you make those payments, let's say that you have 30 days to pay those payments, but you make them on time. And then the more times that you pay all those bills on time, and those get recorded, the greater your business's capacity will be. This all goes back to payment history. The number one factor and the only factor in your business credit profile is going to be your payment history. It's a big factor on your personal side, but on your personal side, they also factor in utilization, length of accounts, how much. There's 5 different major factors on your personal side, only one on your business side, and that is that you have the capacity and the ability to make those payments on time. The downside to that, if you are late, and so much as 1 day late, could ding you for up to 3 years on that report. So you want to make sure, if everything else could be going wrong, but you have to make sure that that payment is in there on time, or it'll really ruin all the business credit that you're working on building. So that really covers the first 2 C's. These are the shorter ones. These are making sure that your business has the proper character and that your business has the proper capacity. Those are kind of these C's that many people don't even think about. The additional three that we're going to really go into depth over the next 3 weeks, which are cash flow, credit, and collateral, are those big ones that we think about. So if you are looking at getting some SBA loans, you're looking at getting a large business line of credit. Typically, if you just go to a bank, they're going to want to see that you have not only cash flow, but you have credit and collateral. Today, we're not going to dive into too deep on the different financing options for if you have cash flow. We will be doing that next week. But today, what we are going to dive in on is credit, the different aspects of funding that is available to you through business credit and personal credit. So let's dive in. On credit, credit-based financing, or AKA we like to call this unsecured business financing. This is startup financing or what we like to call credit card stacking. Now, if you're looking at personal credit cards, typically we want to see at least a 650 FICO score to get unsecured standard credit cards. If you're looking at getting business credit cards with using a personal guarantee, then we're going to need to see at least a 680 in order to get unsecured 0% business credit cards. This is powerful because you can actually, going through a process of credit card stacking, you can not only get personal credit cards, but you can also get business credit cards at the same time. You have to go through it the right way. Now, just because you have 650 or you have a 680 personal credit score does not mean that you're going to be able to get the credit cards. There's other factors involved, but it opens up the door. We're also going to have to look at inquiries. So we want to see less than 2 inquiries in the last 6 months. And so especially we don't want to see 2 inquiries, in the last 30 days, because then that is going to be a reason for denial. Now you may be thinking, well, why would those inquiries, why would it 6 months be okay, but not 1 month? When we see a lot of inquiries close together and very recently, lenders think one of 2 things. 1, that you're in money trouble and you're searching for funds. 2, that you've already been approved, yet we don't know what you've been approved for yet. So lenders are very wary in that situation. So that's also why it's important to think about using your inquiries strategically. Now, after we focus on that, the next thing is when you're going through using your personal credit to get unsecured personal credit cards, the approval amounts using a credit card stacking method can be anywhere from $10,000 in credit to $150,000 in credit. Approvals amounts really equal your current credit limit, so your highest credit card, and multiply that by five. So let's say that on your personal side, the highest credit card limit that you have is $5,000. Well, typically, through a credit card stacking process, you could find about $25,000 in additional credit. Consumer credit reporting. They'll give you up to 5 business credit cards going through this process. Most of these are at 0% interest rates for anywhere from 6 to 18 months. Normal rates after that vary between 5 and 25%. Once again, the interest rate really is going to depend on the credit card. It's also going to depend on your credit score. The better score you have, the better interest rates you're going to have, because that directly correlates to risk. Now, the next thing that we want to talk about is when you are looking at unsecured personal credit cards, there is a fee for this. If you're going through a credit card stacking method, there's a fee. So usually 10 to 12% of a success-based fee. You'll need good personal credit, like we said, a 650 score or higher. Your utilization, so how much of your current credit are you utilizing? Your balances that are going to be carried over each month, that needs to be below 50%. So your utilization is, if you have a $1,000 credit card, you have a $500 balance that's being carried over, that's 50% utilization. And this has to be under 50% for each card and the profile as a whole. Less than eight inquiries on your report in the last 6 months, there's a little bit more leeway on the personal side. One of the best ways to get a high amount of money when you have no collateral or cash flow is going through this process of a credit card stacking. It works for even a business startup. And you may be asking yourself, what is that success-based fee? Well, this depends on how much you're able to find. Let's say that you're able to, in 1 week, we're able to find you $25,000. That means that that could charge that for providing that service of effectively finding those funds, there could be a charge of $2,500 for that. And so you need to weigh those pros and cons. Be like, is it worth getting $25,000 at a charge of $2,500? That's something for you to decide. We do offer a free financial blueprint where we will put your information in and run an algorithm and send you off to our loan broker to really see if there's some credit cards out there that you qualify for right now. And before you even have to move forward in the process, you will know all the ins and outs of, hey, if I go with this line, what is it going to cost? Or if I go with this credit or this loan, what does that cost? Entirely free service. And when our loan officers, for example, find you a loan, then that's when they make their money, which is really cool. The Wise Guys and Ties ourselves actually don't charge you anything for that ever. So let's take a look at unsecured business credit cards. Now, these amounts are the same, anywhere from $10,000 to $150,000. These are a little bit higher. The approval amounts are equal to whatever your current highest personal credit card limit is, and then multiply that by 5 to 8 times. Typically 5 times more than what you'll get on your own. Business credit reporting is another huge factor in this because it's hit or miss. Are the business credit cards going to be reporting on your business credit report or your personal credit or both? We look for the cards that only report on the business credit reporting agencies. This will allow you to get the money you need and also building your business credit at the same time. These cards typically come 0% interest for 6 to 18 months. Normal rates after that, about 5 to 25% thereafter. But going through a process like this really allows you to be able to gain access to those funds that you need. Very similar, it's going to have this 10 to 12% success-based fee like we saw on the personal side. However, they're going to need your personal credit score to be at least 680 or higher. We talked about 50% utilization before, but on business cards, we really need to see your utilization under 30% in less than 4 inquiries on your report in the last 6 months. One of the best ways to get this is the best way to get the highest amount of money when you have no collateral or cash flow. And like we said, this works even for startups. So if you're in the beginning stages of getting your business set up and you want to get business credit cards, but you need to maximize how much you're actually going to get with your personal credit, this is the only way to do it with having a huge rate of success. So as we journey a little bit more into the unsecured business credit cards, we really like hybrid credit lines, hybrid credit cards. These are credit cards that come with a checking ability. So that ability to get cash out, meaning this is now a hybrid program where you can charge it like a credit card, but then also utilize a checking process to pay things that don't accept credit cards. We also have what's called the rapid rescore, which is available. And so what that looks like is, let's say that your utilization is not where we want it to be. We can use a process of getting those temporarily paid down, utilizing a rapid rescore to rescore your situation. Then at that point, we're able to help you with loans that are available to pay down those balances. Soft pulls, we also are available through some resources, so there is no impact to your credit. And then that's when we go and apply. And by doing that, typically 5 times more than what you could get on your own will be able to be achieved. So we see very commonly $50, $100, $150,000 what people are able to achieve by going through this process. What does this also mean by when we say guarantors welcome? Let's say that your personal credit is not in the ideal position that you want it to be. Well, by going down this route, you can actually have somebody invest into your business or partner into your business. And what they are bringing to the table is their good personal credit. Maybe you have a loved one, a friend, or a family member that believes in your business or wants to be involved, or you have somebody that wants to start a business and get involved, but they don't have any money. They only have personal credit. This is an excellent way to use that. Now, let's talk a little bit about corporate credit cards, because business owners can build their business credit. Then they use that business credit that they built to establish the credit that they need to qualify for revolving credit cards without using a personal guarantee or consumer credit check. So if you've heard about that it's possible to get credit cards without using your personal guarantee, that's very true. But the business needs to be established. What you have to do is you have to first start with the vendor credit to start building this track record. Then move on to the retail credit after 5 vendor accounts are reporting. After that's been achieved, then we move into the cash credit and the auto financing after a total of 14 accounts are actively reporting across the 3 bureaus. These approvals are based on business credit quality only. So once you have built a business up with a track record, then you're able to actually go out there and get funding without using your personal social security number. It's very achievable, and it can be done in 6 to 12 months, even as a startup. And you may be thinking to yourself, well, I've never even heard of that. That's nuts. And yes, it is. So reach out to the Wise Guys in Ties where we can help you with that. Another really cool thing is peer-to-peer lending. Many factors determine approval: consumer credit score, income to debt ratios, revenues, profit, cash flow. There's so many different aspects of this that go into the peer-to-peer lending world, but it's something that we can definitely help you navigate. Now, these fees range from anywhere from 0.5% to 10%. Term ranges, so the length of the loans, this could be anywhere from 1 to 5 years. And these loans are pretty substantial. These could be $25,000 to $500,000. This is an excellent way to go. And a lot of the times we refer to this as like the secondary market. Peer-to-peer lending is really, really huge right now because banking lending is kind of tightening up due to the current state of the economy. They're being a little bit more, if you're not getting any type of emergency disaster relief type funding, then any of the traditional fundings are restricting, have some restrictive guidelines. But you got to act quickly. I'll tell you, these resources are drying up each and every day. All right, with that being said, let's talk a little bit about term loans. Now, to get these term loans, personal score of 625 FICO are required. If you have over 700, that's really preferred. You're going to need to be in business for at least 1 year, and this is where revenue and cash flow start to come into play. You need at least $10,000 a month of revenue coming into your business, not necessarily profit, but revenue. Tax returns will show profit, and that is preferred. Basically, good credit and good financials are preferred for approvals, but it's not necessarily required. Like we said, each situation is unique, and depending on your situation, you may have some strengths built up in your business in other areas that will allow you to overcome any weaknesses. But in order for us to really be able to evaluate that, you really need to schedule with us. And you can always do that at going to wiseguysandties.com under the Schedule With Us tab. You can just simply pick a time that works good for you. Now, term loans. Some options are available without tax returns. Some of these could be up for as much as a term of 30 years. Loan amounts in the millions. Yes, in the millions. This is ultimately where you want to get to. 8 to 15% interest rates are typical. New sources lend anywhere from $500 to $15 million. Qualifications are based on the business merits, which really are the credit, the cash flow, your bank account management, and your tax returns. So the credibility of your business is huge. If you really want to start getting access to massive amounts of money, you're going to have to go through the process of building that credibility. And if your business is just starting out, you're looking at starting your business, you're not going to be able to necessarily jump to this point yet. but working it the right way, you're going to be able to get there. Well, that kind of sums it up for the different aspects of credit. But I want to talk to you just for a second about collateral. Now, we're not going to dive into collateral-based funding today. In 2 weeks from now, we're really going to dive in deep on the collateral-based funding. But this is when you have assets, and this could be physical assets, this could be purchase orders, this could be personal assets. There's a lot of different assets that can be collateralized. We're going to dive into that later, but whether you have cash flow, credit, or collateral, we can help you find funding when you just have one, or you have, say, two of those three, or you have all five. You have character, capacity, cash flow, credit, and collateral. You're going to have the most options and the best interest rates. But don't let it stop you if you just have credit or you just have some collateral and no credit. Let us work with you to find the funding that you need so you can continue to build the business that you're looking to build. Now, there is the one catch-all. We talked about corporate credit, and that is really building the business credit to make sure that you have the ability to continue to grow. The catch-all is when you have no cash flow, you have no personal credit, and you have no collateral, that's business credit. In that, you need to have something in order to get those approvals. Now, with business credit, this only reports to the business credit reporting agencies. Utilization does not affect your personal credit score. Business credit inquiries do not show up on your personal credit, and business credit determines whether or not you're going to get that loan. It's going to determine your loan or your line of credit and the amount that you're going to get, the length of the term, and the interest rates. Business credit is huge. You're going to have to go through the foundational process of building and growing your business credit, regardless if you're using your personal credit or you're not. It is one of these things that by going through the process in 6 to 12 months, you're able to actually gain access anywhere from $50,000 to $150,000 for your business. Now, if you want to get started, if you're serious about taking action and building your business credit, getting funding that you need, that's how the Wise Guys in Ties is able to help you. So I encourage you to reach out to us, 888-524-9273. Once again, that's 888-524-9273, where we're able to do one of two things. We can help you build business credit, or if you've already have established credit or established business credit, then we can go out there and help you find the funds that you need today. Once again, from myself, Ray Fleming, and my partner, Joseph Smith, we want to thank you all for being here today. Let's see if there's any questions. If you have any questions, feel free to throw those in the chat. But not seeing any questions, but absolutely reach out to us. Once again, like I said, give us a call or go to our website where you can schedule a time that works for you. And I want to say, go out there. We wish you all the success in business. Be safe, and God bless.